Okay, folks, welcome to Market Wrap. Let's talk about the ISM numbers that were released this morning. The manufacturing data came out slightly better than expected. It rolled in at about 51, which is a sign of expansion. You'll remember that the last report was below 50, which is a sign of contraction in manufacturing. So the markets took that and ran. But be that as it may, while we had a better than expected number, it's at stall speed for the most part. The markets didn't care. They spiked the Treasury yields higher, as well as the U.S. dollar. Construction spending, however, that came out lower than expected, negative number. So not a good, real net result for the economy today, but the dollar bugs shrugged it off, and I think that for the most part, the reason why the dollar rallied is not so much because of the so-called positive economic data, it's the weakness out of the European banks. Here is Deutsche Bank. This is the first day of the month, but it's trading down on the month already, down nearly a percentage point on the month. Let's take a look at a daily chart, see how we might open. Okay, daily chart of Deutsche. We had a rally off the lows of the day, still closed down on the day, obviously. I would expect to see a continuation pullback, probably a bull flag formation, in anticipation of a settlement with the United States. The 10-year yield, this is a weekly chart. We gapped higher this week. We kind of knew this was going to happen. Remember last week on the week ahead commentary over the weekend, I mentioned we had a reversal week last week. While we still closed down, we closed well off the lows. And this chart even better illustrates the fact that we broke out, pulled back, and retested the breakout point. This is a very, very bullish setup. Yields appear to want to go higher. The VIX update today, inside day, no new high, no new low. Not much to talk about here. I think there's going to be in a sideways consolidation. And I just pulled up a chart of the TVIX for members that have been around for more than a few weeks. You remember we were long of the TVIX a while ago, and every once in a while I like to still check in with it to see how it's behaving relative to the VIX. And while the VIX closed higher today, the TVIX closed lower. So this is why we don't want to trade this vehicle any longer, unless, of course, it hits extreme oversold levels, which is nowhere near at right now. I would avoid this instrument. I know a lot of you folks are fans of it. I would avoid. It's just not correlated sufficiently with the VIX. The U.S. dollar, a very, very odd day today, and I'll go into it in a moment, but let's talk about the weekly chart. You'll remember over the weekend I mentioned that we had closed down below the lower band of this support level. We're trying to recapture it. There's a fight on to try to recapture that support level, which is now resistance. Daily chart. The dollar had a good day today, closed above its 50-day moving average for the first time since September the 20th. So a good day, but it closed off the highs of the day. Double bottom setup on Stochs RSI above the 0.2 level, bullish. Stokes are hooking up, bullish. So it looks like the dollar has the wind at its back. RSI is putting in higher lows. No breakout yet, but let's draw a trend line. Let's keep an eye on this RSI. Okay, so here you have it. Very, very tight pennant formation. This is going to break really quick, really fast, one way or the other in the next several days. The transports, really big day today, up 1/4 percentage point, rallied right into resistance, closed below it. Volume came out lighter than expected and below Friday's up volume. The chart still looks good. Stokes look good. NASDAQ comp closed right at resistance or support. Putting in lower highs on Ultimate Oscillator, lower highs on Stochs RSI, rolling over on Stokes. These could hook back up again. S&P 500 daily chart. Bounced off of support. Volume to the downside was light. Very choppy indicators. The trend is definitely weakening. But you really need to pay attention more so to the volume and price action. Why? It's because as stocks, indexes, ETFs, whatever you're trading, currencies, commodities, as they trade sideways, the indicators get skewed because these are momentum indicators, forward-looking indicators, and when you have no momentum and you're just trading back and forth, you get false positives. So you need to really rely upon your support, resistance levels, and your volume action, as well as your price action. IWM daily chart, down day, but off the lows of the day. The chart looks good, holding on to its 20-period moving average. Volume to the downside was light. Same story here as what I just mentioned on the S&P 500. You're getting false positives or false negatives. You're getting a lower series of lower highs. I wouldn't trade off of these right now. I would wait for a break. I'll wait for a break below the 20-period or the 50-period moving average before I decided to get short. The banks consolidating. Let's go to a daily chart. Still trading below the 50-day moving average. Lower highs are clear on RSI. Trading below the 50 level, not good. Volume to the downside is light. Double top and lower high on Stokes below 50. That's not a good sign. Platinum Metals Group. So the metals, for the most part, are weak today. But Platinum Metals Group closed higher in the day by about a third of a percentage point. So it behaved well. It's respecting this lower band of support. It remains in a pennant formation. We're not ready to add more here yet. We need to see strength. Then we'll decide upon whether or not we're going to add more anytime soon. Higher lows appear to be getting put in on stochastics. Let's go to a 2-hour chart. All right, lethargic price action intraday. Not much to talk about here. USLV, I mentioned over the weekend, hollow candlestick, bearish stuff. It gapped down today. I wasn't going to sell it into a panic. We did rally off the lows of the day. We held support at 2048. We use a stop loss right below that level. So in essence, we make a new daily low. We stop out of the trade. Let's go to a 2-hour chart because the metals and emerging markets behaved very odd today in the face of a strong U.S. dollar. Note the bullish reversal on a 2-hour chart on silver. That's bullish price action. And normally when you see that, you see a rally in the ensuing days, but lately those rallies are faded, much as what we're seeing on gold and the gold mining names. Nugget, daily chart, tested its 200-day moving average for the first time in several months. I was going to say 2016, but several months. The last time it tested or touched its 200-day moving average was back on February the 22nd when it rallied through it. Volume rose today to the downside, but the 1-hour chart looked very attractive to me because we consolidated for 3 hours at this level. At one point in time, I thought we were going to break down and see a 16 handle on Nugget. It wasn't to be. We saw strength late in the day, and that came along with the U.S. dollar, which is overlaid here in green, putting in higher lows and breaking out with higher highs. So that was a bit of a divergence and rather surprising. And when you take a look at BRZU, which is an emerging market play, it rallied almost 9% on the day in the face of a strong U.S. dollar. And over the weekend, I mentioned the emerging markets. I haven't taken a look at this chart yet, but I warned about it. On a weekly basis, the emerging markets looked a little bit concerning because they were putting in topping action. But take a look at this chart on a weekly basis. We rallied higher today. That's despite a strong U.S. dollar. That's a divergence. The markets are sending us a signal that there are wavering opinions out there about the U.S. dollar. Now, me personally, my knee-jerk reaction is that we had talks break down between us and the Russians today about Syria. That's not good. That's pretty bad stuff, to be honest with you. More importantly, though, I think it's the fear of the banks as well as the economic data that was released today, which was not good, yet they sent yields higher because there's a perception out there that the Federal Reserve, come hell or high water, is going to raise rates. I'm not necessarily in that camp. And if you see a continuation move higher on the emerging market plays and the dollar move higher along with gold, that's a fear trade. That means that money is not just flowing into the U.S. dollar for safety, it's also seeking a haven in emerging markets as well as gold because there's not as much confidence as there used to be in the U.S. dollar. So food for thought. We're going to keep an eye on this very, very strange divergence that's going on right now. Let's go take a look at a daily chart of the EEM. The reason why I wanted to take a look at a daily chart is to take a look at volume, and volume was good today. So this just wasn't short covering. This was some accumulation that was going on, and the EEM appears to want to go higher. So interesting stuff with emerging markets and commodities today versus the U.S. dollar. And Noodles and Company, NDLS. RSI remains with 11 handle. I wanted to open a position today. The rule of thumb here with me, folks, when I trade these oversold stocks, extreme oversold stocks, is that I like to wait to as late in the day as possible before I pull the trigger. Why is that? It's because many times you get a false breakout, meaning the shares will rally and then sell off by the end of the day, and that's exactly what happened today. Now, we didn't break down below Friday's lows, which is a good sign, and honestly, the 2-hour chart, let's go to that, the 2-hour chart looks pretty good. We rallied through the upper band of resistance this morning only to break down and then come back down and nearly retest the lower band of support. So with that type of price action, I'm a little bit concerned. We do have a breakout on RSI. It did successfully pull back, retest the breakout point. Good stuff. So we may be pulling the trigger tomorrow on NDLS. But remember, we only want to buy a small opening position. We don't want to go getting all aggressive just because it's oversold on a daily chart with an RSI below 12 doesn't mean it can't go below 9. Believe me, this stock can go below 9 on RSI. It trades below $5 per share. I've seen it happen before. Let's not get suckered into a false sense of security because RSI is below 20 or below 15 in this matter. Let's just be careful. Now, Ultimate Oscillator is trending higher. I still like the chart. So this could have been just a retest of support, and it may be off to the races tomorrow. So more to come on NDLS. Don't forget the short interest in it, and that would really benefit us if they began to get squeezed. Now let's talk about LABU. We booked profits back here on LABU. Remember, we got long here. We booked profits up here. The shares pulled back. We drew this trend line. We expected to see a retest of the breakout point. We got it. So now it's time to go shopping for more LABU. Let's take a look at an intraday chart. Before we do that, let's take a look at both RSI, setting up a double bottom setup at the 50 level, and the Stokes. I would expect in the next day or so to begin to see them hook back up above the 50 level. Intraday chart, we'll use the 2-hour. Let's annotate this chart. Okay, so here you have it. Higher lows getting put in on the Stokes and RSI. We did break out above the upper band of resistance on the 2-hour chart. Now, this can be bought, but I would only buy a portion of your position, allow for a pullback and a retest of this breakout point, add more there, then finish your buying on a breakout above 49.57. That would be a confirmation breakout. Now, where you want to put your stop is right below this lower band of support. Let's use 46.20 as a stop point and keep those losses small. And that's it for tonight, folks. Everybody have a great evening. I will talk to you tomorrow. Remember that Wednesday is Member Stock Chart Request Day. Enter your symbols on the ticker cloud, and I will go over them on Wednesday evening. Be well.